Hello everyone, good morning. Welcome back to my YouTube class. So last video we have solved problems on assessment of partnership firms. That's an income tax 2 subject. So it is the question will be asked in Bcom and BBA examination. So in last video we solved problems with respect to assessment of firms. So today also have prepared one video with respect to the problems only. So I have taken the question paper problems, the question paper previous year question paper problem, that is from Mysore University, and you know how to assess the partnership firm. So you have to find out the book profit, and second thing is that you have to find out the total income of the firm, and third thing is that you have to find out the tax liability of the firm. See here the partners, it is given A, B and C are the partners in a firm and sharing profits and losses in the ratio of 3:2:1. So their profit sharing ratio is given 3:2:1, and they have asked to find out the firm's income and tax liability for the assessment year 1920. So this is the old question paper, so you can change the date if you want. Okay, so first they have asked to compute the firm's income. So before finding the firm's income, you have to find the book profit here. So to find the book profit, they have given the profit and loss account here. All debit side, you know that it shows all expenses and losses. Credit side, they have taken all the incomes and gains, and net profit is given. The net profit is 33,200 is the net profit, and some additional information is also given. So with the help of this, first we'll try to find the book profit. So to find the book profit, you have to take the base as the what net profit is to be taken as the base. So you go for the solution. So you take the heading computation of book profit, and you take the base, that is net profit as per profit and loss account, that is given that 33,200. For that you take the heading add disallowed expenses. So you take the heading add disallowed expenses. So to disallowed expenses, you go for the problem on the profit and loss account on debit side. So in the debit side, you go on checking the expenses. If it is not related to the business expenses, you go for disallowing such expenses. See here, first one is salary. So if they give just a salary, means it is treated as a allowable business expenditure. Second one, office expense. Office expense is also one of the allowable business expenditure. Third one is given reserve for bad debts. So here reserve for bad debts 4,800 is there. In profit and loss account, you are going to take only the revenue, expense and loss, and also the incomes and gains. Here any reserves provisions, it is created, it is an appropriation of the profit. So when it is appropriation of the profit, it is not to be taken on the debit side of profit and loss account. So hence what you have to do means you have to disallow any reserves, any provisions if it is given in the profit and loss account. So you go for the solution, and you take reserve for bad debts 4,800. And next one, after reserve, depreciation is given. So depreciation is a allowable expenses, but if any adjustment is given means you go for the treatment of the depreciation. Otherwise it is a allowable business expenditure, no any adjustment is required. But there is one adjustment given, so we'll see that later. Municipal tax paid is given, so and they are telling it is for house property. So if municipal tax paid means it is not a business expenditure, it is the expenses related to the house property. So you go for the solution and you take the municipal tax paid 3,000, you disallow. And next one, they have given donation. So donation 2,000 is there. So donation here, if there is no any information given in the adjustment, you go for disallowing the total donation. And in the adjustment, if they say that donation is is given to promote the business, means it is taken as allowable expenses, like donation given to any commerce association or trade association, etc. It is a allowable business expenses. If nothing is stated means it is to be disallowed here. But in the adjustment we'll see what is given for that. We'll treat according to that. Next is salary to partner. So salary to partner. So here in problem, any salary, bonus and commission, if it is debited in profit and loss account, you have to disallow. So in the solution, you take salary. So you take salary. So salary A and B is given 24,000. You take 30,000 for B. And here commission to given to the partner ABC. So commission also is to be disallowed. So take commission also. Next is interest on capital is given, that is at 15%. So the rule says that if any interest is given to the partners on their capital, up to 12% you have to treat it as a allowable business expenditure. If it is more than 12% means that excess is to be disallowed here. So here excess is how much? You take 15 minus 12, the excess is 3%. That 3% is to be disallowed. So here you go for the problem. You take commission, interest on capital. See here you take 15 minus 12, you will get 3%. To calculate, you take 7,500, that is for 15, divided by 15 you take into 3. How much for 3%? So you get 1,500. And for B you get 3,000, and for C you get 1,500. And next I told about the donation. So here see, for the donation we'll see the rule. First additional information is given. Depreciation allowable as per IT rule is rupees 10,000. So adjustment they are telling, as per the income tax rule, the depreciation deductible is 10,000. But in profit and loss account, you see how much they have deducted. They have deducted, see, in profit and loss account, depreciation deducted is 8,000. But actual amount to be deducted is 10,000. So here 8,000 deducted in profit and loss account, but in adjustment they are telling you have to deduct 10,000, means that 2,000. Still you have to go for deducting depreciation of rupees 2,000. That adjustment you take under the allowable expenses head. Under the head allowable expenses, you deduct depreciation 2,000, because already 8,000 is deducted. Still 2,000 more is to be deducted. And another adjustment, that is the donation, includes 2,000 paid to local school. So here with respect to donation, total donation given in profit and loss account is 2,000, and they are telling that 2,000 is with respect to local school. So here any donation given to charitable trust, institutions, schools, colleges, etc. Here the firm can claim deduction under section 80G, that is 50%, but here it is not a business expenditure. So what you have to do means, in book profit you have to disallow this donation 2,000 rupees. And they are telling A and B are working partners. So for the remuneration purpose, you take A and B as only the remuneration to the working partners. That is, you have to consider only the A and B. And they are telling fulfilled section 184. So here if you want to give remuneration deduction, they have to claim section 184. So they have fulfilled that condition. So this is the expenses given on the debit side and on the adjustment. So after that you go for disallowing. You take the total of the disallowed expenses. The total you get is 89,800. If you add it, you will get 1,23,000. After that you take the heading less allowable expenses. So you take the heading allowable expenses. In allowable expenses, you have to check the adjustment or the additional information. Okay, so you go for the adjustment or for the additional information. See first one about depreciation. So about depreciation I told they have to deduct 10,000, but 8,000 is deducted. Means still how much is to be deductible? 2,000 more is to be deductible. So in allowable expenses head you take depreciation, that is 2,000. Okay, there is no any expenses that is to be taken on the allowable expenses head. You take the difference. So 1,23,000 minus 2,000 means you will get 1,21,000. Next you take the heading less incomes not related to business. So heading incomes not related to business means you go for the credit side of profit and loss account. If the incomes are not related to the business, then you go for deducting it. See here, first one, interest on debenture is given. It is not income from business. It is the income from other source. So you deduct the 12,000. Next, house rent is given. So house rent means it is the income from house property. So it is also not related to the business income. So you deduct 36,000. Next one is long-term capital gain. So it is also income from capital gain. You deduct that 32,000 also. Next, dividend from Indian company. Again, it is income from other source. So it is not a business income. That also to be deducted here. So go for the solution. You take incomes not related to business. So in that you deduct interest on debenture 12,000. House rent 36,000, long-term capital gain 32,000, dividend 5,000. So if you take the difference, you will get 36,000. So 36,000 is the book profit. So after calculating book profit, we will move how to find the total income of the firm. So to find the total income of the firm, you had to take first, total income means you have to take all the sources of income like business income, house property income, income from other source, capital gains. If you add all the incomes, you will get the total income. First we will find the business income. To find the business income, you have to take the book profit as the base. So here you take book profit as base, that is 36,000. After taking book profit, so you take the heading less remuneration to the working partners. So what you have to take? Remuneration to the working partners. So remuneration means you have to take first point there, actual remuneration. So you take the first point, actual remuneration. Actual remuneration means you have to add three things here. One is salary, second is commission, third is bonus. Means it is given to the only working partners. So here in the problem, in the adjustment they have given that the working partners are A and B. So see here, A and B are the working partners. So you have to take the salary, bonus, commission, etc. only to the working partners. So you see the salary A and B is given. So both are working partners. So you take the salary plus bonus is not there in the problem. And third thing is commission. You take for A and B 5,000 and 8,000. So salary 24,000, 30,000, commission 8,000, 5,000. If you add, you will get 67,000. Or second point, you have to take a statutory limit. So statutory limit, in that you take the first condition, that is 90% of book profit of 36,000. So book profit here is 36,000. Book profit up to 3 lakh you have to claim 90%. Here you don't have 3 lakh, so you take the actual 36,000. On that you find 90%, that you get 32,400. Or the rule says 1,50,000, whichever is more. So here 1,50,000 whichever is more means you take 1,50,000 to the inner column. And the second point you have to take is 60% of the balance. So you find the balance is there in the book profit. Balance means if more than 3 lakh book profit is there means you take that amount as the balance. Here book profit is not more than 3 lakh, so there is no any balance of the book profit. So you take only 50,000, whichever is more, there is you take the total 1,50,000 that you take to the outer column, second inner column 1,50,000, or the remuneration 67,000. In this you have to take whichever is less. So whichever is less here, 67,000 is the lesser amount, that you take to the outer column and you deduct from 36,000. 36,000 minus 67,000. Okay, you get the minus figure, that is minus 31,000. It is not a business income, so you are getting here business loss. Okay, so business loss is 31,000. Next, after computing business income, you go for other sources of income. So here other sources of income is you check the profit and loss account credit side. Sometimes it is also given in the adjustment also. First you find the profit and loss account credit side. See here you take interest on debentures. So it is income from other source. Okay. And one more is that dividend from Indian company 5,000. So it is also income from other source. But dividend you write exempt. Income dividend is exempted here. Next to source house rent is there. So you have to calculate the house property income here. Okay. 36,000 you take as the base and calculate the house property income. And long term gain is there. So you take long term gain, that is 32,000. So you'll take the incomes. First we'll take interest on debentures, income from other source. Interest on debentures you take 12,000. Dividend you write exempt. Next, you go for the house property income. If you want, you write the heading income from house property, and after that you take rent received is given. So you take the rent received on the credit side is given is 36,000. You take that as the base. From that you compute the income. You take less municipal tax paid. So find out is there any municipal tax paid to the house property. So municipal tax paid is there. So where you have to check? You have to check the debit side of the profit and loss account. See here it is given municipal tax paid, that is 3,000. So you deduct that municipal tax paid. Yes, see here municipal tax paid 3,000. The balance is 33,000. So you take it as the annual value. From that you give deduction under section 24, that is standard deduction you have to apply 30% on 33,000. So you get is 9,900. After deduction, the house property income is 23,100. So this is the house property income. And next, capital gain is there on the profit and loss account. So you take that income here 32,000. So after taking the total, you will get the gross total income, that is 36,100. Is it? We'll see once. Yes. 31,000 is the business loss. Okay. Debentures income, that is income from other sources 12,000. House property income is 23,100 and capital gain is 32,000. So you can go for setting off the business loss from other source. So you set off the business loss and the remaining gross total income you get is 36,100. After gross total income, you give deduction under 80. So you find is there any deduction eligible under section 80. So if there is 80 IG, 80 IA, 80 IB, if there is any profit from industrial undertakings, infrastructure, business and all, you can claim under 80 IA, IB, etc. and 80J, 80J, JAA. So many deductions are there. You go according to the problem. But in this problem, there is a donation given to the school. So you could remember that the donation, it is given on the profit and loss account, and in the adjustment they are telling donation is given to local school. So for that you have to claim 50% of the amount under 80G. So you take 2,000, 50%, so you will get 1,000. So if you deduct, the balance is the 35,100. So it is the total income of the firm. So this is the way you have to calculate the total income of the firm. They also asked to find the tax liability. So in next coming problem, we will try to find the tax liability and the income of the individual income of the partners. Okay. So thank you very much for watching this video, and I request to subscribe my channel for more upcoming videos. Thank you.